Hi, it is Joe Mazumdar from Exploration Insights at the pre-PDAC edition of the Metals Investment Forum. And with me today is George Ogilvie, the president, CEO, and a director of Arizona Sonoran Copper Company. And it's unique, and it's one of my top picks. And the reason is that I am very bullish on the copper market, but obviously we've seen not everything works in the copper market. But you've got some unique attributes, this asset, and if we could talk about them, that make this, gives it a big comparative advantage versus others.
Yeah, that's correct, Joe. I mean, obviously this is a former producing mine that was in production in the 1970s and 80s, so it's a known entity.
So this is Southwest Arizona near Casa Grande.
That's right, yeah. And so it's a known entity. It's all on private land. So there's no federal regulators involved. We're only dealing with the state and the local municipality. The asset came with water rights through until the year 2070, so that's 47 years away. There's an abundance of water in the area, which is only permitted for industrial use. Because it's a brownfield site, we take advantage of some of the existing infrastructure. I think the largest one is the fact that the main power line runs right through the property with 115 kVA of additional power, which excess power on it. And we can even get green energy from the state utility provider right off nuclear, of that. Right? Nuclear, and there's obviously Arizona, there's a lot of solar power. The property, the site has already got a significant, robust PEA. And of course, we're well into a pre-feasibility study, which we expect to come out towards the end of this year. So if the stars align and we're able to execute on our plan, in the next 3 to 4 years, we should see first cathode production actually come out of this site. And of course, that could be at the beginnings of a really bull secular market in the copper space. And obviously, our shareholders would see huge upswings in the valuation of the company.
But you'd be producing potentially copper cathode because you're dealing with solvent extraction electrowinning, going right into potentially the US market as opposed to selling it to a smelter somewhere.
Yeah, that's correct. And of course, if you're producing grade A LME copper cathode, you actually are paid a premium for that. And you're quite right, it won't be going outside of the US. Copper right now in the US is not listed as a critical mineral, but there's a lot of lobbying going on to make it one. But I think everybody knows that any copper produced as cathode in the US is going to stay domestically within the US for use. And Arizona actually supplies more than 70% already of the US domestic supply of copper.
Right. So getting the state to permit it, which you've already done a lot of the permits already, and there's just a few permits left, like having the state do it as opposed to the federal government makes it much easier. But also, what is it? The U.S. Corps of Engineers has designated the site as not having any waters of the United States.
That's correct.
Which stops you from having to do a 404 permit.
That's correct. There's no NEPA 404. And, you know, when you're only dealing with the local municipality and the state regulator.
Especially in a state like Arizona, which is pro-development.
Yeah, pro-development for sure. Once we apply for a permit, once the application is administratively accepted, and it can take days, weeks, even a few months to have an application administratively accepted. But once it is, it starts a clock ticking. And within 6 months, the regulator must give you a response to your permit. So that's part of the legislature. It's part of the state law there. So we have very defined timelines when it comes to actually gaining our permits. And I'm happy to report that with all of the permits that we've applied for to date, the maximum period of time we've had to wait for a permit once it's been administratively accepted is 5 months, which obviously is within the 6-month time window.
So the first scoping study came out with doing a leach of the former stockpile, expanding open pit, and then doing some underground later in the sequencing. And what has changed? I mean, there's been a radical change in thinking.
That's right.
From the PEA to now potentially the PFS at the latter part of this year. Yeah,
so in the summer of last year, we were drilling on a deposit known as Park Salyer, which was known to the former operator, which was ASCU. They hit mineralization, but they walked away from it. Top of the mineralization is 300 meters below surface, and they weren't interested in underground mining, looking for open pit material. So we started drilling that last summer, and we could see from the size and scale that it was going to be extremely material. And that, of course, was not included in the PEA. And the PEA had 28,000 tons of cathode production, annual production, and a mine life of 18 years, which wasn't bad, but didn't quite get us up to that 50,000 tons of cathode production. Now that Park Salyer is coming in, and it's going to lend itself to predominantly a sub-level cave, which allows us to mine more material on a daily basis.
And lower cost.
Drives down the cost because of the economies of scale. When we layer that into Cactus, we're expecting by the end of the year, when we produce our updated PFS, that the average annual production will be at or above 50,000 tons of cathode production annually. And the mine life is now going to be in excess of 30 years. So that really helps as well from a project financing perspective, because when you start to look at the debt and suddenly you've got a long tail like that, all of your debt ratios and everything become extremely attractive, and the ability to put debt on the project increases significantly.
Well, now it doesn't seem to me like for critical minerals, and I do include copper as one of them, that money doesn't seem to be the issue. Like there are lots of ulterior sources of funding for. We've seen with nickel projects, lithium now with Lithium Americas and GM. So do you see alternative forms of funding as well?
Certainly that would be a possibility. I mean, right in Casa Grande, we have an electrical vehicle manufacturer right there, Lucid Motors and Nikola Trucks. So obviously they don't need copper cathode, but certainly they need copper wire and copper foil for those electrical vehicles. So there's definitely opportunities there. But I would say with the robustness of this project, as far as the economics are concerned, the long mine life, cathode production, I don't think we're going to have any issues in obtaining the project financing on this, even through traditional sources such as commercial banks.
So one thing, the PFS, the gap was, like you said, Park Salyer, but another one is a technological potential breakthrough in this Nuton technology that would potentially bring the sulphide, which was ignored before, into the mine plan. So can you tell us about what this Nuton technology is about?
Yeah, so the Nuton technology looks at the heap leaching of a primary sulfide, in this case, chalcopyrite. Typically today, the only way to process chalcopyrite is through a flotation mill. And we've tried to stay away from that because it would significantly increase the upfront capital. We'd rather go with a very simplistic heap leach, SXEW, keep the capital intensity really low. Once we get into production, we will then have the optionality to look at many different forms of processing the primary sulfide. But Rio Tinto has approached us. They've been experimenting with this technology for over 40 years in-house. We're one of a small group of companies that they've now invested in to give them access to the primary sulfides to potentially see if they could leach the material. Our physical column test started up late last year in November, just outside of Melbourne at Bindura. And we're starting to see the initial results of those leaching tests. And indeed, we have a meeting next week with Rio to further discuss the results. And we're anticipating probably sometime in the second quarter of this year, we'll be in a position with some of the initial columns to release the first results. And, we're very hopeful that if those look promising, we might be able to develop our business partnership and relationship with Rio Tinto and the Nuton technology. Of the £6.5 billion of resource that we have in the ground today, £1.7 billion of that is actually copper in primary sulfide. So we don't need it to have a very robust base case with our leachable material, but certainly that would be the cherry on the cake, so to speak, if you could get access to an additional £1.7 billion of copper.
But the 1.7 is a bit constrained in that the drilling sometimes stopped when you hit the sulfide and it was never looking for the sulfide.
Yeah.
But if the Nuton technology works, then you might actually drill for sulfide.
We would drill for sulfide, and I would expect the resource to increase substantially from what we currently have.
Especially Park Salyer, because the grade of the primary sulfide is much higher than Cactus.
Yeah, now for Park Salyer, we actually have been drilling the full extent of the primary sulfide, and you're quite right. Park Salyer is sitting in at around about a 0.8% is the grade in situ of the primary sulfide. For the Cactus, it's more half of that in around is about 0.4%.
Okay. And now you're seeing a bit more moly in some, is that in Park Salyer in terms of a credit potentially if you do flotation as opposed to Nuton?
Yeah, if you ever went with flotation in the entire system, there's a small amount of gold, a little bit more silver, but there's molybdenum throughout the entire system. And we're definitely seeing higher grades at Park Salyer. So if you ever went with flotation, you would be able to recover some of those precious metals and the moly through the flotation circuit.
And just to round this up, if people weren't interested enough in the addition of Park Salyer in terms of upside into the PFS, the potential of Nuton technology to open up the sulfides, you also have a major, let's say, developer, exploration company right next door that did one of the biggest IPOs in the US by the name of Ivanhoe Electric.
Yeah, with Robert Friedland, who probably everybody certainly knows.
Know in there. So that's another interesting case for district consolidation. Their deposits, definitely higher grade, but deeper.
Yeah, essentially it's the down plunge extension of the ore bodies that are Sarco mined here and the mineralization that we intend to mine in the ensuing years. And what's interesting about Ivanhoe Electric, today that company has a market cap of 1.4 billion US dollars. 70% of the value is ascribed to Santa Cruz. So if you work out the math, that's maybe 900 million US dollars, but it's a greenfield site, hasn't secured water rights yet, is 10 years plus probably away from first production. But across the road here, we now have a brownfield site that has water rights, has all of these great things that we spoke about. And yet today, Arizona Sonoran only has a market cap of 150 million US dollars. So we think the gap between the valuation is obviously too large. And we think that's going to close between now and the end of the year when the PFS comes out. And we would expect the valuation of Arizona Sonoran to actually move up substantially in the next 12 to 18 months.
Okay. Well, thank you very much, George.
Thank you, Joe.
That's George Ogilvie, the President, CEO, and Director of Arizona Sonora Copper Company that's developing the Cactus and Park Salyer copper projects in Southwest Arizona. That's it for me, Joe Mazumdar, Exploration Insights, speaking to you from the Metals Investment Forum, the pre-PDAC edition in Toronto. Thank you very much for listening.